In this video, we're going to talk about something extremely attractive. I know the first thing that came to mind was Dwayne Rock Johnson, but that's not who I'm referring to. I am talking about premium finance, but I can see why you may have thought The Rock. So with that being said, what is premium finance and why is it the big raise and why is everybody talking about it? Well, premium finance is essentially a fun way of saying I'm having somebody else pay for my life insurance premiums, and majority of the time that is a bank or institution that will pay for somebody's life insurance premiums. Now you may think to yourself, well, that sounds attractive. I want that. I want to be able to have an and asset overfunded whole life insurance and not actually have to pay money out of my pocket. And in reality, this concept is only meant for 1% of the population. For 99% of you, if you are listening to this concept is not for you. Now, I'm not saying tune off because I think it's very important that you actually pay attention to what this concept is. This concept is for the ultra wealthy. This is for someone that is making $400,000 to $500,000 a year in annual income. This is somebody that has a massive death benefit need and a massive estate planning need, someone who has $10 million or net worth or more, essentially someone who can afford it but doesn't want to pay for it. See, if you're somebody that's living paycheck to paycheck or even that's making a couple $100,000 a year, this concept is not for you. And there's a lot of levers that are happening behind the scenes because you are borrowing money from the bank to pay your life insurance premium. And if you can't afford this, if something essentially goes sideways a little bit, well then you can lose a lot of money. And especially as interest rate environments increase, you can really get into a real slippery slope, especially if you're using index universal life insurance. The question that I have to ask yourself, why do you want it? What is the value behind it? And does it make sense? And what is the risk versus reward? You see, the reason why the ultra wealthy want this is because they value control. You may value control as well, but they value control in a whole different light. They truly understand the value of having their dollars to go be able to build massive, massive wealth in other places. See, in premium finance, you're typically paying $500,000 a year into a policy, $1 million into a year into a policy to create a specific amount of death benefit. Now that 7702 happened, the death benefits essentially are going down based off of the amount of money that you're putting into the contract. You now have to put even more money into the contract to hit a specific amount of death benefit need that these ultra wealthy individuals are trying to accomplish. And so if I need $10 million of death benefit, I could come out of my pocket, I could pay $500,000 or $1 million a year to essentially hit that. But what happens to that money? It's essentially now not in my control to be able to use, because when you put money into this concept, a lot of the times the bank is going to require your policy as collateral. So what ends up happening is that you have to have collateral either within your policy, and a lot of times you're not going to have enough collateral in the policy because if you understand life insurance, you know in the first couple of years you don't have dollar for dollar access. So you're going to have to use something different as collateral. Think of it this way. When you're borrowing money, what happens? There's a control cost. So if I'm borrowing $1 million at, let's just say 5%, well, what is that? That's $50,000 every single year that you're going to have to pay in interest to essentially have this strategy in force. Now, for you, that may be like, well, that's a lot of money. That's more than I was even thinking about putting into my policy. Well, that's $50,000 for you, but $50,000 to somebody that has $1 million to put into a policy they're just choosing not to, essentially isn't that much money at all. And when we're looking at it to the second year, we now have $2 million, because 1 year, 1 million, year two, $1 million. You now have $2 million, it's at 5%. You now have $100,000 of interest that's accrued. So now you have to keep figuring out ways to keep paying the interest to the bank. But the beautiful part about the strategy is if you are somebody that is the ultra wealthy, and when I say ultra wealthy, I don't mean like the Bill Gates of the world, Elon Musk. I just mean somebody who has, like I said, $400,000 to $500,000 of income, who has a massive estate need, who wants massive death benefit for their family, $10 million in net worth, that does not want to pay out of pockets premium. Well, you can accomplish the goal if it's funded right, you are with the right company, there's the right terms in regards to the banks, right? We have to also look at the terms in regards to that. If all stars align and all things make sense, then amazing. I think this concept could work really well for you. Now, there's not a ton of these that are written every single year, and I do believe that with the rising interest rate environment, I do believe that they are becoming a little bit less sexy, but I do believe that they can still work for the right person. So again, to wrap things up, premium finance is a very sexy, attractive strategy, but it only is for a select few people. If you're somebody that has cash flow and lots of it, amazing, but you're not fitting to the buckets that I have previously described, let's just get you an overfunded life insurance to where you can borrow against to go build wealth. See, the people that need premium finance, they've already built wealth. They've already built up this massive empire that they're now trying to protect, which is why the death benefit is the important play. Premium finance is something that is made for people to use for death benefit. Like, that's the main goal. And a lot of times you can't even use the cash value because the bank is using that as collateral. So that's not something that you even want. You want the ability to borrow and control your dollars, to be able to go build real estate, to buy your asset-based activities, something that's going to increase your cash flow. They already have enough cash flow for themselves and for their lifestyle. So if you're somebody who's listening to this and you're like, wow, like that sounds attractive, but that's not you today, that is not you today, but it could be you in the future. Today, let's go ahead and get you set up with something like an overfunded whole life insurance policy, high early cash value to borrow against, to go ahead and use to increase your lifestyle, to increase your cash flow. And if you already have cash flow, amazing. Let's go ahead and continue to expand upon that using the and asset as that foundational tool.